Welcome to Invest Desk, which is your number one channel for cryptocurrency investing, daily news updates and forecasts. My name is Syed, and we're going to be talking about crypto taxes and, more importantly, how I actually legally avoided crypto taxes for 2022, because the tax season is here. The last day to file your taxes, if you're in the US, of course, is April 15th, which is a little ways off, but not that far away. So hopefully you've done your taxes, you've taken a look at your crypto gains. So I'm going to talk about exactly how to avoid, right? If you have not done so, then this is for you. And remember, I talked about crypto taxes about 7-8 months ago, right? This was the last year, because December 31st, of course, is the crypto taxes or your income cutoff date, right? So I talked about this about 7 months ago. This was last year, right? So go check out my live stream, guys, because if you missed that live stream, then you may be struggling with your capital gains if you became a millionaire, like in SafeMoon, like we did. And so I'm going to show you exactly what I did, how I legally avoided, or actually I should say avoided completely, right? It's like minimal, like just a few $1,000s. How's that, right? For a millionaire. And so welcome back to Invest Desk, your number one channel, of course. Let me first go ahead and set up my chat as always. So if you're new to the channel, please subscribe. And of course, while you're here, smash that like button, because we are going to be talking about how I legally actually avoided crypto taxes for this tax year, even though we made tremendous amount of gains last year, right, with the SafeMoon Token and other portfolios that I have in crypto. So let's say you have, $1 million in capital gains. Well, if you're in the high tax bracket, because if you are declaring $1 million in crypto gains, you're probably paying about $300,000 in taxes, right? Roughly about 28% or 30%, right? Something like that. That's your tax bracket. Could be even higher depending on what other incomes you have, what other sources you have. But that's really what I'm going to be talking about today, and I'm going to show you how it all happened and how actually I avoided it, right? Really. So thank you for, of course, the tax advisor, and of course my own research that I do, and I bring it right here at Invest Desk, because this channel is meant to be your research oriented channel, so you can actually take a look at it, and of course do your own research. I do my own research, I share it here. You got to do your own research. So thank you for tuning in. Let me set up my chat here. There we go. All right, welcome back to Invest Desk. I'm going to talk about how I avoided crypto taxes. So let's get on with it, and I'm going to talk. Let me show you first thing. So I'm going to show you step by step, right? So we don't talk about capital gains and there's different scenarios perhaps, and how you can actually whether you actually fit into one of those scenarios or not. And if you do, it'll be exciting to see your comments flowing. All right, so make sure you give it a thumbs up. I'm going to go ahead and start. So let's see. There we go. All right, perfect. So the first thing I want to talk about is not the crypto gains, not the capital taxes. I want to just tell you simple thing. If you have a loan, if you have a personal loan, for example, or a debt, right? Let's call it debt. It's not taxable. Okay? Yeah. And by the way, if you've not read the book of Robert Kiyosaki, I guess his name, Rich Dad, Poor Dad, you got to go see it, right? You got to go read it. You got to understand the book. I think I made a live stream on that too, but that's really helpful. I mean, this is definitely helpful for people who are making tremendous amount of wealth or money. Okay, all right. So if you have a loan, for example, because a loan means you're borrowing money from a lender or a bank, they are not considered income. Okay, so your income is your tax, or your tax based on your income. A loan is not an income. So income is defined, if you do not know, well, I'm sure you know, just kidding. Income is defined as money you earn from a job or an investment. Not only all loans not considered income, but they're typically not taxable. The only time a loan would be considered income is if the loan was canceled by the lender or a bank, and that's rare unless you actually go through some process, right? But typically, your loan is not, your debt is not taxable. All right. So where am I going with this? Why did I start off with this? Here's the reason, guys. If you have, let's say, how I did it, right? We did it. We actually made, let's say, $1 million with SafeMoon, okay, last year. So what happens? If I were to declare that $1 million as a crypto or as a gain or as an income, right? Income, yeah, I'd have to pay tons and tons of hundreds of thousands of dollars in just capital gains, okay? And I'm going to show you the brackets also. I think I have it here. Let me pull that up and then we'll talk about it. Where is it? Okay, bear with me here. I have the tax brackets here, guys, so we can go through this together. Okay, not here. Where was it? Alrighty then, let me bring it up. It was here somewhere. Okay, let's see. Yeah, there we go. All right, perfect. So your federal income tax brackets are as follows. So if you are $539,901 or more, you're going to be paying a whopping $162,000 plus 37% of amount over $539,000. So let's say you made $1 million, boom. That's like almost, wow, half of your money is gone, guys, right? Uncle Sam's going to take half of your money. So what did I do? How did I actually avoid this particular scenario? Okay, so remember, if you look at my live streams, I share my portfolios. And I know most of you guys didn't like it, right? Yeah, I know. Or some of you didn't like it because you said, well, I'm not holding SafeMoon and this and that and whatever it is, right? But hey, I got a tax advisor, guys. I got my own portfolio. I just share my news here. I just share my research and you guys look at it, right? So you're looking at it right now. And this was 7 months ago when you guys were looking at it. Well, geez, you got to hold SafeMoon. You got to hold SafeMoon. Well, I was making $1 million. So, well, that's it, right? All right. So with that gains last year, remember we bought property. Check out my live streams. It's all live. I mean, I stream live, guys, right? I'm not recording anything. I'm just talking live with you right here. So here's the thing, right? So you want to be able to take that money that you actually profited, right? And that was a huge profit. And of course, it's all taxable. Look at this tax rate. I mean, this is incredible. This is 2022 tax rate, by the way. If you're made $500,000 or more in income, okay? This is income, okay? All right, so the simple way how I avoided legally was, of course, the fact that got into debt. And no, don't get scared. It's debt. It's good debt, right? There's two kinds of debt, bad debt and good debt. Yeah, I can go read that Rich Dad Poor Dad book. It's just a simple book, simple concept, but people do not apply most of the time. And if you did, let me know in comments. I'd love to hear your story. But this is what happened. You actually get into debt, which is good debt, and good debt is only, say, real estate is good debt. Yes, sirree. That's right. So you get into debt, which is not taxable, and you got that right? You can add 2 plus 2, which equals 4. So you got into debt, you put down some money, and you buy properties, and that's what we did. So you're only taxed, of course, on some of the areas that what's left of it, right? So it's only minimal. All right, so that's one way to avoid, and the other ways also that I'm going to talk about. All right, so this is about, first let's go through this quickly. Individual filers are taxed at the following rates, and if you're joint filing, married couples, then of course the rates are a little bit higher, right? Taxes owed $174,000 plus 37% of gain, only if your taxable income is over $647,000. Okay. All right, so let's take a look at how to there are other ways to avoid, okay? And I'm going to give you those as well, so you get an idea of how you're actually guys are doing with your taxes, right? So yeah, and if you'd like to share, that's perfectly. Share it in comments. Let's see if I can bring it up. All right, perfect. There we go. All right, so DB Digital says, this is awesome. Thanks for sharing. Hey, no problem, because InvestDesk is your #1 channel, of course. And if you're new to the channel, please subscribe and smash that like button. Certainly appreciate it. All right, so I want to talk about, I'm going to go from left to right, by the way. All right, let's talk about where is the taxes. I talked about the brackets here. All right, so how to avoid getting wrecked by crypto taxes. Now, a few things here that you may also find very handy. And I've done this 6 months ago, guys, by the way. Yeah, when we're talking about crypto taxes, I actually did maybe a few live streams on the fact that, hey, watch out for the crypto taxes. This was 7 months ago, right? All right, so let's start with an example here. Let's say, well, I'm not talking about NFTs. I'm going to give you a simpler example. Let's see if I can find it. I have it here. All right, there we go. Not that one. All right, there we go. So when do US citizens have to pay tax on crypto? You have to pay tax, or capital gains tax, that is. Events involving cryptocurrencies include selling cryptocurrency for fiat, sending cryptocurrency as a gift. And this is another, by the way to reduce, not completely, but pretty much help out lower your taxes, right? So if you make a gift, anything over $15,000 for the 2021 tax year, only that is taxable. So if you gift $15,000 worth of crypto to your loved one or whatever, brothers, sisters, whoever, right, family members or friends or charity or whatever, then you're not paying taxes if it's less than 15,000. So that's another way you can legally, of course, save on crypto taxes. Another way is, of course, purchasing goods and services with cryptocurrency, even small purchases like buying a coffee. You have to pay tax. Trading or swapping one digital asset for another, let's say BTC to SafeMoon, SafeMoon to Dogecoin, Dogecoin to whatever, you are going to be paying taxes if you're gaining money, because each transaction must be collected and reported, right? So you got to have all these transactions. And of course, there's multiple softwares out there that do it for you. I think I also covered that in the live stream way back 5 months ago. Go check it out. List of softwares. You just pop up your wallet addresses, and it pulls all the transactions and tells you the gains and losses. Another way you can do it by or lower your taxes, by the way, is offsetting your losses. So if you lost money, that's going to offset the gains. Okay, it's not just the income, but you can actually reduce that way as well. All right, so that's these are the things, by the way, you have to pay taxes on. Now, how much crypto taxes do you have to pay? I already covered this. This is the 2021 tax bracket. I showed you the 2022 earlier on, okay? And then we know how to prepare for the tax season. Perfect, that's pretty cool. All right, so US crypto-based tax year 2022 inflation-based changes to no. This is sort of like helpful too. So if you want to avoid paying taxes, and that's exactly what I just was talking about, the deductions and whatnot. So let's scroll down. I'm going to show you after the federal income tax brackets. There we go. So how to avoid, and taxes are wild card for public companies, by the way. Investors in MicroStrategy, Tesla, for example, Block, Coinbase need to consider how wild price swings will affect results, not only directly but indirectly due to complex tax accounting rules. And there's another thing I want to talk about that may help you is, of course, the cost basis, but I'll probably do it towards the end. And that's a very important concept within crypto and how crypto is taxed. If you don't know this, then you got to stick around. And if you're new to the channel, please subscribe and of course smash that like button while you're here. These are the top 4 ways you can actually pay zero tax on crypto gains. Let me know if this applies to you or not. I've shared my formula of how I avoided tax, right? Well, actually not. Yeah, because you get into debt, you buy property, boom, and the property are up since last year, at least 20 to 25% in the US. So think about it. That $1 million is worth, I don't know. I gotta ask my my advisors as to, hey, what's the worth? What's the net worth? All right, let's get back to 4 ways to pay zero taxes on cryptocurrency gains. Buy cryptocurrency in your IRA, individual retirement account. Okay. Now, the easiest way to defer or eliminate tax on your cryptocurrency investments is to buy inside of a IRA or 401k, defined benefit or other like Roth IRA or retirement plans. So if you buy cryptocurrency inside of an IRA, you will defer taxes on the gains until you begin to take distributions, which probably near retirement or maybe or whatever you need it, right? So at least for now, you're not going to be paying, let's say a few $100,000. If you made $1 million last year, you're not going to be paying that money. Okay, it's going to stay there, stick in that. It's going to get stacked away in your IRA accounts for a while until you withdraw it later on, right? So that's probably a better way you could have done. If you did it, let me know in comments. All right, buy cryptocurrency in your life insurance policy. I don't know about this one, but something that, it's here. So let's take a look. So another way to pay zero tax on cryptocurrency gains is to buy coins with an international life insurance policy. Now, I've not researched this, by the way. I've not, I didn't use it. I didn't research it, but hey, they say you could do that. For example, you can fund an offshore private placement life insurance with any amount of money you wish to create, the equivalent of Roth or traditional IRAs. Oh, I get it. Yeah, so it's the same IRA, but it's actually, looking at a, life insurance policy offshore, okay? So most offshore private placement policies require a minimum investment of $1.5 million to $2.5 million. So for those of you who are crypto millionaires, that could have been a great option. And in the future, by the way, next year, this is awesome because now you know what to do even this year, right? So if you become crypto millionaires again, which hopefully we will, once again, we'll see how we can deal with these. All right, the third way is buy cryptocurrency as a resident of Puerto Rico. I think I covered this, if I'm not mistaken, because Puerto Rico doesn't have any federal tax. Jeez. Should we move there now? Yeah, let's get on with it. No, I'm just kidding. So yeah, if you're not old enough to have a large retirement account and you don't want to lock up a couple of $1 million in a life insurance policy, then consider moving to a U.S. territory of Puerto Rico. That's right. So we U.S. citizens are taxed on our worldwide income, by the way. Income is taxed, guys. I mean, that's it. So no matter where we live, we must pay U.S. tax on our capital gains, including gains from cryptocurrency. The only exception to this rule is found in the U.S. territory of Puerto Rico. Boom, there you go. So I thought about moving, by the way. I don't know about moving, but that thought crossed my mind. But of course, I am where I am. That's pretty cool. But this is something that, yeah, you may want to consider. So let's say you made a $10 million, right? I mean, that's probably worth it. So if I probably made $10 million, I probably would be in Puerto Rico, right? Yeah. Live streaming from there. So Puerto Rico sourced income is excluded from the U.S. tax under the IRC Section 933. The source income in any capital gain or business income earned by a resident of territory that qualifies for Act 20 or Act 2022. And of course, the requirement is that the resident of the territory is any U.S. citizen who spends at least 183 days a year on the island. So boom, let's go on. Let's get there for at least 183 days, and you will not be paying any crypto tax or federal income taxes if you reside there for 183 days. So this is pretty cool. That's another, what do you call it, right? Yeah, a way. Pretty cool, isn't it, right? So that's another way. That's the third top way to buy cryptocurrency as a resident of Puerto Rico. The fourth is, of course, give up your U.S. citizenship. Now, we don't want to do that, but hey, that's another way. So the most dramatic way of stop paying IRS for your cryptocurrency gains is to give up your U.S. citizenship. So once you expatriate, the IRS no longer has the right to your earnings. Would you give up your citizenship simply to avoid taxation? I don't know. Would you do that? Let me know in comments. Hey, what's going on? All right, so that's another ways you can avoid crypto taxes is top 4 ways. Okay, I've already talked about how I did it. Okay, but these are additional ways you can actually take a look at it. Now, some of the other ones, additional ways you can avoid taxes on cryptocurrency legally are as follows. I talked about buying in the IRA. I talked about moving to Puerto Rico. Declare your crypto as income. So if you receive cryptocurrency in exchange for goods or services or mine cryptocurrency, taxation works differently. So in these cases, your cryptocurrency is treated as income when you receive it. So you must record it and report the fair market value of the cryptocurrency received and count it as income on your tax return. Now, when you report this income, it's taxed at ordinary income tax rates that we just talked about. These are higher than capital gains tax rates. Your base is, and this is what the cost base is all about. This is a tax term, by the way. Now, I'm not a tax attorney or, I'm not even a financial advisor, guys, even though I have a degree, but hey, talk to your financial advisor. So your base is a tax term used to define the currency's initial value when you received it. For the crypto you receive is the amount you report as income. When you eventually sell or dispose the cryptocurrency, you use that basis to calculate any capital gain you may have and pay the applicable gains taxes. So that's another way. Fourth is hold on crypto for long term. So that's 1 year. So if you hold it for 1 year, that could be beneficial. So if you're not selling, for example, are we holding Dogecoin for? Yeah, we bought Dogecoin last year, February, right? It's been over a year, but we haven't sold any Doge at this point in time. But this year we're planning to become Dogecoin millionaires, aren't we? Right? Yeah, we are. Why not? And if that happens, once you sell, you made your $1 million or whatever, and then you hold, for long term. That's the deal, right? So that's going to lower your tax burden. Make sure the crypto you sell has been held for more than 1 year. If it has, your cryptocurrency sale may qualify for the lower long-term capital gains tax rates. This could save you a significant amount of money on your tax bill. Okay, so that's another way you can take a look at it and then plan ahead, guys. This is, of course, this year's we're already in like March, right? So we're 3 months out for the next year tax season, right? So whatever happens this year, you got to declare your taxes, right? Whatever your income is. So that's another way you can hold crypto, sell and hold crypto for more than 1 year. That's going to reduce your tax burden. All right. Offset crypto gains with losses. I talked about that. Sell assets during the low income year. Something interesting. I don't know if that's, we should do that, but whether you have short-term or long-term capital gains, your income determines the tax rate you pay. The lower your taxable income, the lower your tax rate will be. Okay, so all they're saying is that you should sell crypto during the low income year. So if you're not making too much money this year, maybe you want to sell it. That's going to, of course, help you out financially, but it's still going to lower your taxes. That's another strategy. Donate to charity. I talked about that. Give gifts to family. I also talked about that because you can give up to $15,000 per person per year without filing a gift tax return or paying any gift taxes. So under 15K, boom, easy, you could do that. Even if you exceed the $15,000 limit, you still won't have to pay gift taxes unless you used up your entire 11.7 million of lifetime estate exemption. So talk to your financial advisor, talk to your tax attorney, right? Whatever. Let them know, hey, I'm going to declare this gift, right? Yeah, or if you received gift, of course, the criteria is the condition is that either you receive it or you give, whatever. All right. The ninth way is hold on to it until you die. So yeah, that's, I don't know. So when you die, your assets receive what's called step-up basis, when they're passed on to your legal heirs. Let's say you bought $1,000 of Bitcoin today, which is worth $250,000. When you die in 20 years, if you sold Bitcoin right before you died, you'd have to pay taxes on the 249K, right? Yeah. So that, anyways. So I hope this helps, right? I talked about several ways you can actually lower your tax bill or legally avoid paying taxes on crypto. But of course, if you have substantial amount of income, right? Let's say become a crypto millionaire, that's what we're talking about. And you know that how I, sort of like um, avoided, in one aspect, and of course, doubled my income or my wealth. I should say wealth, right? There's a difference between wealth and income, right? So um, way more than that, right? So that's the way you do it. Let me know in comments what you think. Hopefully you like it. And if you're new to the channel, please subscribe, of course, and smash that like button. Certainly appreciate your love and support for InvestDesk, because InvestDesk is your #1 channel. So where am I? There we go. All right. So how to avoid crypto taxes. Now you know how I did it last year, of course, and I did stream about it. So you can't say, hey Syed, you didn't tell us. Hey Syed, you didn't talk about crypto taxes. I talked about 5 months ago, and it'll probably the same strategies. I actually applied this strategy. We got into real estate with all these gains, right? We got into debt. This is good debt. Real estate is good debt. It's not bad. Real estate is up 20% anyways, right? Plus you can rent it out, you can flip it, and there's so many options if you do that. So take your millions or your capital gains, and instead of paying flat out 30% or 37%, right, plus some change, hundreds of thousands of dollars in change that the IRS would want, you could actually take a look at these ways. I hope this helps. Let me know in comments what you think, what your crypto strategy is for legally avoiding crypto taxes. My name is Syed. Thanks so much for being here, because InvestDesk is your #1 channel for cryptocurrency investing, daily news updates and forecasts. Before you go, give it a thumbs up.